Alright guys, in the next few seconds, I'm basically going to show you guys how I found, or not how I found, but how I entered this trade here on gold. You can look at it as supply and demand. This was a demand trade, and this was a fair value gap that I had, a fair value gap setup. I had my high broken on my market structure. As you can see, those blue labeled circles, that's representing the actual structure of the market slash the trend. And we were in a bullish trend, and because of that, I wanted to buy low, and I saw demand pop up on the lower time frame, which is on 1 minute, because I saw something I wanted to see form here because I have a strategy. I was just rushing my brain trying to explain it to you. So, as you can see, everything is labeled here. So my entry is labeled. I use different color lines when I'm labeling my entry, my stop loss, my take profit. As you can see, TPs, take profit, which is I had targeted the next high, and SL below my entry, and the low. Yeah, not below the low, below my entry, which was there at the green line. And yeah, so let me show you guys how I basically found this trade and how pretty much I got this little win for Tuesday. So yeah, let's get right into it right now. So the first thing I want to do is I want to go on TradingView, and I'm going to do that right now. So here it is. All right, I have it downloaded on my computer because I wanted it on full screen. So the first thing I want to break down to you guys is this. All right, so this was the trade I had on gold. The first thing you always want to do when you're trading gold is, here's how I'm basically showing you how I found it, is you want to identify your market structure, and then after you identify your market structure and you're familiar with the trend, then you're going to look for demand to show up. So for example, if I'm in a bullish trend and I'm trading gold, let's say we have market structure, right? Let's say we have some market structure going this way. Sorry, I'm just trying to move my this way. Then, and I wanted to find a demand zone, let's say here, I need to wait for some demand to show. So what does that mean? So if my entry is right there, and let's say this is on a higher time frame, and then I'm waiting for a reaction off of this, let's say, well, not my entry, this is my demand zone, and because here's how I trade. So I find higher time frame demand zones, and then I enter them on the smaller time frame when I see confirmation on that time frame. So let's say this whole example here is on the 4-hour, and this is a 4-hour demand zone or fair value gap, and I'm going a smaller time frame, and in that smaller time frame we had bearish price action. We have bearish price action going into that demand zone. So what I would do is I would wait for a disruption of that trend. Let's say we have some bearish price action coming down. I'd wait for a disruption, so I wait for price to make me a break of structure. So I wanted to disrupt this previous bearish trend on the smaller time frame by waiting for price to take out one of the highs of the bearish structure, because when that happens, that's a change of character, that's a change of direction for the market. And especially if we see some high volume blue candles, which for me, because my charts are blue, if we see some high volume candles along with a break of structure, we can confirm that demand is present in the market. And so when demand is present in the market, when I'm trading gold, that's when I get in. And so yeah, so once I saw demand there, I will basically wait, or once I see demand there, I basically wait for price to come back down, and I enter, and I usually target the next high or liquidity if there's a liquidity available. For gold, I want to give you this major tip. So the 3-minute for gold is the best. I use the 3-minute time frame when I'm trading gold for my not my long-term trend, but my short-term trend. And for my long-term trend on gold, I usually use the 4-hour to the daily time frame. You guys are available to use those time frames for yourself if those work for you. This is what works for me. And I want to go and actually show you the chart here. So yeah, so we were in an uptrend on gold. You got to actually catch the moves on gold because gold's always moving. And so I saw that gold was moving, and basically because the fact that we were in a bullish trend, and now we're in a bearish trend, as you can see here, because now we had that break of structure there. And I know there's a lot of stuff in my chart, so it's kind of distracting, but basically I had my market structure, and all I did was simply go on a smaller time frame, like the 1 minute, and I waited for my confirmation of demand to show. So I'm gonna show you my confirmation of demand. So my confirmation of demand is right there at the low, where it's taking out those highs, those bearish highs right here. This is my confirmation of demand, because we have these highs taken out by these big, giant, unhealthy price action candles, these institutional candles, right? Smart money. And when that happened, we had a fair value gap right here, which was my green entry. Price tapped in with a wick, right? Tapped in with a wick, and then immediately rejected and went off into my profit, which was right at the next high. So the whole confirmation was this: we had demand show and be present in the market. I was like, okay, so the demand is in the market now. So once there was demand, I waited for price to come back down and get cheaper, right, at the demand zone where price was low, and boom, entry, take profit. And that demand also took out these highs right here that were on the bearish trend, because right here, after we had this low, price began to consolidate, right, back upwards, and finally, we had that breakout. And so that's basically how I got this trade. I trade really simple. I trade Forex too, but I trade gold, and that's what I'm focused on now. I also trade crypto too, if you see my Instagram and stuff. But yeah, guys. A major tip for you guys for trading gold is trade gold. I usually get in at 9 a.m. to 11 p.m. because that's usually when gold's most volatile and moves. And I'm not saying trade when there's volatility. I'm just basically saying trade when you see trade before or after the volatility. So for example, when I'm trading Forex, I use an economic calendar that shows me the time that there will be volume, high volume events that could affect the market. And when I get that information, then I say, okay, I can trade before the event happens or after the event happens. I usually get in my entry before the event happens, and if I don't find one, I get in after. That way, I'm actually waiting for something that's actually a part of my system to be present before I'm actually just entering trades out of nowhere. So so I really think you guys should do that. When you're trading gold, I know a lot of people say trading gold is hard. The one thing that was hard for me trading gold was I always started on the 1 hour time frame. I always started on the 1 hour, and I thought gold was tradable on the 1 hour like really quickly. I thought gold moves quickly on the 1 hour, but the thing is, gold's slow. So the 1 hour on gold is basically like the 4 hour time frame. It's like the 4 hour time frame on other currency pairs. So gold on the 1 hour, it may not be a lot to you guys, but the 1 hour is basically like a high time frame. And then when you're trading gold, you have to go below the 1 hour. 5 minute, 3 minute, 1 minute even, and that tends to be where most of my gold trading setups are. The 5 minute, the 3 minute, and the 1 minute. So if you guys are trading and you need a trading strategy, and you guys need something to apply to your strategy, or you need a strategy, I would just say first learn how to identify the trend and market. Learn how to identify the trend of the market, and learn how to identify when the market is shifting. And once you identify that, then you can next identify the supply and demand started, and then that's where you're entering. So when you're selling, where that supply started, so you can enter again, because the market always retraces itself. The market never goes in one direction. The market goes like this. It goes up, and then the market eventually is going to come back down to low prices, right, before it goes up again. The market doesn't just go straight up. I tell this to every video because it's pretty much how the markets move. It's so simple. So trends is just market structure, which is the market going up, expanding, markets expand, right? Then markets drop. Then sometimes markets consolidate, right? Then after markets consolidate, markets expand again, drop, expand, consolidate maybe, and the same thing when it's bearish. So if you guys are trading and you're struggling with the trends, this is really good analogy. This is a really good analogy for you that I think you guys should really pay attention to. So yeah. So sorry guys, I know I'm just trying to make the video longer because I want to try to give more value so you guys can because I know a lot of people have been trying to trade gold, so I'm trying to make sure we cover the market structure and the trend part of it, at first, because yeah, that's really important, and I want you guys to make sure you guys have that information. And sorry guys, I'm just on my phone because I was checking a message from someone that was saying something about when they were trading gold, they used a daily time frame. I don't usually use a daily time frame on gold, and because gold moves, like, see how it moves? It just goes straight, like it just goes straight up and down, straight up and down. And there's the rejections, the retracements on gold take like months when you're on the daily time frame. So the 4 hour and the 1 hour are typically what I like to use. It's mainly the 1 hour. The 1 hour is like the daily to me on gold. And yeah, so right now gold is in the bearish trend. Gold will be in the bullish trend because long term gold is bullish. And here's how it will happen. So price right now is dropping, right? Dropping. Price eventually is going to come from at a low point and reverse. And when that reversal is going to take out that previous high. And when it takes out that previous high, that's a confirmation of the trend shift. And that was actually what I was explaining to you guys earlier. So, yeah, man. It's really all about just doing that and knowing when to identify the right time to get into the market. So, I hope this video was helpful. I'm going to go ahead and end the video, today's video here. And if you guys need any more help or anything, you can join the Discord. I have a Discord here. Let me see if I can pop it up. There it is. I have a Discord. It's free. Don't worry. I'm not going to make you pay for the Discord. It's free for now, right? I was thinking about actually making it paid because I notice when you make stuff for free, people don't take it seriously, right? And there's a lot of traders that will say they'll do stuff and they'll actually like show up to it. They just want to be a part of stuff, right? They don't actually want to like take action. But yeah. I have a lot of chart galleries in this group. So by chart galleries, I mean I have a YouTube section channel where every time I make a YouTube video, you'll just know, right? I have a money calendar section. The money calendar basically is just the economic calendar, so you just know what's if the U.S. dollar, if you're a gold trader, the U.S. dollar is moving, when it's moving, so you can know that will affect gold. The group trades chat, right? There was a Bitcoin trade I had earlier. It was a small trade right there on Bitcoin in the 1 minute, and yeah, there's some people active now. If you go back to my strategy gallery, you'll find order block, fair value. You'll find all these chart galleries, right, of information that's helping you find trade setups. And I literally made this free. I'm actually not, I think I am going to make it paid. So if you guys are watching this, literally join right now. Like right now, while you're listening to this. I don't care if it's Instagram, just go right now. But yeah, guys, I have so many examples from like years worth of, because it took me about my whole journey. It's been 6 years for me. I started 6 years ago. I was trading, doing basic like support resistance and all that stuff on all Forex, gold. And in the last 2 years, I came across institutional trading, smart money concepts, and things like that. But I found that when I shifted to the smart money concepts 2 years ago, it really helped because it made me it gave me a new perspective on how the market works, and that is allowed me to approach my setups and my analysis on a different level. So I'm really happy I'm able to do that. And if you guys have any questions or any concerns, just let me know. But yeah, guys, I hope you guys enjoyed the video. I'm going to go ahead and end here. Peace.